For decades, the investing advice has been simple. Just buy the S&P 500, keep adding money, and wait 30 years. But the world's largest asset manager, BlackRock, recently warned that this strategy alone may not be enough anymore. And the big reason is something that most investors overlook, and that's income. Today I want to break down what they're saying and why strategies like private money lending are becoming more attractive for investors who want income in addition to growth. The article they wrote, that was published this past weekend, explains that traditional portfolios built only around the S&P 500 may face challenges going forward. One reason is market concentration. If you take a look, there's only a small number of companies that now drive a huge portion of the index's returns. And many of these companies don't pay meaningful dividends. In fact, the largest companies in this index now make up around 40% of the S&P 500, but their average dividend yield is extremely low, around 0.4%. So while the market can still grow, it's not necessarily designed to produce income, and that's a key shift that the article highlights. As investors live longer and want financial independence earlier, portfolios need to do more than just grow. They need to produce cash flow. Most people invest for net worth, but eventually you do need to make that shift to cash flow. And growth assets like stocks are great for long-term appreciation, but they don't always provide consistent income unless you're selling shares or you're relying on dividends. And remember, those dividends are not very strong with the S&P 500. That's why the article discusses adding income-producing investments alongside of traditional stocks, things like bonds, infrastructure, private credit, and real estate. These assets can generate yield, not just appreciation. Now, I want to be clear about something. I personally still have money invested in the stock market, and I personally still believe in long-term investing in equities. But I also like the idea of diversification. So instead of relying on just one strategy, I prefer to have a portfolio that includes both growth assets and income-producing assets. And that's where real estate, specifically private money lending, fits into my own personal strategy. Private money lending is when you lend money to a real estate investor who is buying or renovating a property. Instead of owning the property and managing the tenants and maintenance and contractors, you're acting more like the bank. You provide capital for the deal, and the borrower pays you interest instead of the bank. And that interest is your income component. And typically the loan is secured by real estate. This is exactly the type of income-producing strategy that the BlackRock article is talking about. When you lend on a deal, you're typically earning something like 8 to 12% annualized, backed by a property, and often for 6 to 12 months. Sometimes that interest is paid monthly, other times it's paid when the property sells or refinances. But either way, the goal is income, not just long-term appreciation. You're not waiting 30 years for your investment to grow. You're creating yield right now. Another really interesting thing that the BlackRock article mentions is that many investors are starting to use retirement accounts to access alternative investments, instead of keeping everything in traditional stocks and mutual funds. This is actually something I've done myself. I rolled over an old 401k from a previous job into a self-directed retirement account. This allowed me to invest in things outside of the traditional stock market, including private money lending deals backed by real estate. I also still have my current employer's 401k, and that's invested in the stock market. So instead of my retirement account being only in the stock market, I can now use it to generate income through lending and also keep it invested in the stock market. One reason I like private money lending so much is that it fits my lifestyle. I have an demanding corporate job, I travel constantly. Running a portfolio of rental properties can become a second job very quickly. And even with property management, you're still making decisions and dealing with operational issues. So private money lending lets me stay invested in real estate without running an operational business. And it also gives me that income that I'm looking for. I'm providing capital, earning interest, and the borrower is doing the work. For decades, the investing conversation was mostly about what will grow the most. But more and more investors are starting to ask, what will actually pay me? And that's why strategies that generate income and yield are becoming a bigger part of diversified portfolios. Not instead of stocks, but alongside them. So if you want to see exactly how a private money lending deal works, including how lenders are protected, how the loan is structured, what the returns actually look like, make sure you're subscribed to my channel. Because once you understand this strategy, you'll see why more investors are choosing to be the bank instead of just owning property.